Hello, everyone, and welcome to High Tide's corporate webinar. This is David Vidala from RBMG. High Tide Resources is listed on the Canadian Securities Exchange under the symbol HTRC. Joining us today is the company's director and interim CEO, Steve Roebuck, who will be going through High Tide's September investor presentation. This will include an overview of current operations, recent achievements, and upcoming milestones. At the end of the presentation, we will address some frequently asked questions for management to answer. Please note this presentation is being recorded today, Thursday, September 15th, 2022, and will soon be made available on the company's website at hightideresources.com. Today's call may contain forward-looking statements that are subject to risks and uncertainties that may cause actual results, performance, or developments to differ materially from those contained in the statements and are not guarantees of future performance of the company. No assurance can be given that any of the events anticipated by the forward-looking statements will occur, or if they do occur, what benefits the company will obtain from them. Also, some risks and uncertainties may be out of the control of the company. High Tide has a full disclaimer on page 2 of their presentation. Lastly, RBMG is not a registered investment advisor or broker-dealer. For more information, please visit rbmilestone.com. And now I'll hand it off to Steve. Steve, the stage is yours.
And thank you very much, David. And thank you, RBMG, for organizing this and putting it together. And of course, everybody who is listening live today or on the recording, thank you very much for your time. For some of you, this will be the first time that you're going to be seeing High Tide. So I'll try to touch all bases. For others that maybe have a little bit more familiarity with the company, and we'll try to hit the specifics on the iron ore story that we are talking about right now today, amongst the others. So High Tide, as its slide says, advanced projects, strategic locations, essential commodities, sustainable value. All of our projects are in Canada, safe, secure, and accessible. This is the cautionary statement David mentioned. Just a quick snapshot of the company. On the right-hand side, you'll see the commodities that we are exploring. We are listed on the CSE. The 3 projects we're going to discuss today are the Labrador West, which is our iron project in Labrador, Newfoundland, Lac Pegma, copper, nickel, cobalt, and zinc in Quebec, and our latest addition, the clear-cut lithium project near Val-d'Or, Quebec. They're all adjacent to existing production infrastructure in development friendly jurisdictions, Quebec and Labrador and Newfoundland. The commodity focus is on essential commodities required for infrastructure development, maybe they're infrastructure commodities, and the renewable energy technologies. And we think we're well positioned to rapidly advance the development of our projects. Quick slide here on the directors and the management, the team that works hard to make these projects go forward. There's somebody covering a lot of the bases here on the banking side. It's our chairman, Stephen Altman, myself, Donna as our CFO. And on the director side here, independent director, Joe Pavaromo, 50 years of experience in iron ore. He's in steel making. He knows everything about that. Serge Pelletier is a director who I knew from BHP Billiton. And then Carol Seymour, she is born and raised in Labrador City, has iron ore in her DNA, and she's also one of our directors and comes to us from Altius. Quick snapshot of the share details. 67.4 million shares outstanding. Split up between those the entities listed there. Most of these shares are actually right now in escrow. They are being released 10% every 6 months from various entities that you see here. Most of these shares are in escrow. The cash balance is a little bit lower than that. This is as of March 31st, our last financial statements. I say that because in April we started drilling at the Labrador West project. So we also still nil debt. So that's always a positive there. Now here, let's dive in and look at what the opportunity is and the reasons to own high tide resources. What we're doing is we're building a company with high value mining assets at its base while integrating transformative technology. And what I mean by that is in the near term, we're drilling off a major iron ore asset in an established Canadian mining camp. But longer term, and it could be mid to longer term, you have to see where we are in this evolving space of this, low to no carbon emissions in the green iron and steel. And I think this is, we've seen this coming over the last year or thereabouts. And I think that this is a way of positioning high tide to participate in this changing way of using iron ore in the production of steel. So I think this is an area I think we can capture some value, and I think that Newfoundland and Labrador will do that as well, as they have all the required inputs for the green steel going forward. We have a strategic advantage in Labrador City. We've been there since 2019. We've got, our core shack is there. We know the locals, and we've got industry contacts in town. The project being the Labrador West project is proximal to all required infrastructure. You've got abundant supply of low cost, renewable, emission-free hydroelectric power. That's huge. You're near rail, port, modern town, skilled workforce, etc. And you've got supportive federal, provincial, local governments, agencies, and the First Nations. Just looking at the immediate area, and on the map on the right hand side, you can see our Lab West project on the north side and our Lac Pegma copper, nickel, cobalt to the south. In the middle, straddling the border, where Quebec is on the west side and Labrador is on the east side, you've got 4 operating mines. This is the southern Labrador trough where we are, 2 in Quebec and 2 in Labrador. You've got the cities of Labrador City and Fairmont. The southern Labrador trough, or Labrador trough in general, is a world-class iron ore district. They've been producing iron there for over 60 years, over 2 billion tons produced. And here's the key, is the high quality of the ore that is produced. It's got the low phosphorus, aluminous, sulfur, and alkalis. These are key things that make the product that comes from this, the concentrate or the pellets, but mainly the concentrate, in demand globally. And the quality is superior to what comes out of Australia and Brazil, and more than offsets its disadvantage in terms of freight. This catches a lot of people off guard when I present the company in the United States, or I present it in Europe, especially in London, is that we got 4 operating mines. A lot of people didn't realize that we had 4 operating mines here. So you've got Carol Lake, which is IOC, Rio Tinto, Mitsubishi. You've got Scully, which is Takora Resources, all on the Labrador side. And then on Quebec, you've got ArcelorMittal and Champion Iron Ore. And Champion's a name that's just going to come up a couple more times right here. So one of the things was happened in the last 5 to 10 years is this flight to quality, and the market is changing. Fe62 is the benchmark, but what the product that comes from the Labrador trough is plus 65% concentrate, up to 66. And that sells at a premium over the benchmark standard. And this is in part because the Chinese government, going back to that 2017, they've been urged to use a higher quality of material. And you can see these various quotes on why it's a good thing. It's a good thing in the environment. Obviously, we've seen many images of the air quality in China. Anything that you can do to improve that quality, improving and the input on the iron is key to that. Lower deleterious elements, better quality product. Now, I mentioned that Champion I'm going to discuss them in a little bit of detail right here. So first, let's look at the map on the right-hand side. At the center in red, you've got the IOC Rio Tinto Carol Lake mine producing, nameplate 23 million tons per year. We're equidistant to the northeast, and to the southwest is the Kami deposit. That one, I have a line-by-line comparison on that table. So you look at it, Champion is the owner of, Champion Iron is the owner of the Kami deposit, high tide. Again, equidistant more or less from Labrador City. The metrics that are used on their side came from a 2018 updated feasibility study. So this is a study that's available on CDAR. So it's only 4-year-old information. And September 26, it's almost just 4 years. So at the time, they were looking at about $64 FE62. That was what they built into their price model. As of yesterday, we were at 102, so significant upside on that. The reserve is 500 plus million tons. We're looking at a resource, our inferred resource of about 500 to 1 billion tons. I don't know exactly where that's going to land. The iron grade is about 28.8% Fe at a cutoff of 15%. We're targeting about 28 to 30% ourselves. And now the rest of that, the mine life, the production, the value, the IRR, that came out of the feasibility study. So we don't know what that looks like at this point in time. Now, Alderon was the owner. Alderon was the company that was the owner of the Kami deposit. And they did some remarkable things between about 2009 and maybe about 2012, 13. The company was formed, it transitioned itself, and did a transaction with Altius for the Kami deposit, a very similar transaction that we did for Labrador West. That was in 2009, 2010. They were busy marketing and raising capital, and the iron ore market was very, very frothy at that point in time. They raised about $35 million in 2010, started drilling in 2012. They drilled the hell out of this deposit, and by 2011 they were drilling. By 2012 they started getting some serious investment for, one investment of $40 million and another one of about $194 million. So they had built up within 3 years a market capitalization of $300 million. So it's just an example. This is a snapshot of a project that is something that I look at as the standard that we can look at, and that there's a bit of a framework of how we can position our project in a similar light to how Kami was advanced. So it's very positive for us. So let's look at the project. And before I just kind of turn here, is that, but at the bottom of it, what underlies the value was a quality project. And that's exactly what we have at Labrador West. So let's look at that project. So it was a former Rio Tinto project, Rio Tinto Exploration. I'll refer to them as RTX, between 2009 and 2019. It was in a joint venture with Altius. They had outlined an area of over 1 billion ton potential, about 28 to 30%. They drilled 18 holes in that time frame, and then their internal notes stated that it should be possible to produce a high quality, low impurity concentrate at reasonable grind sizes, and that's very encouraging to hear. So we went into an arrangement where with Altius in which we took on this project. COVID hit in 2020, kind of threw that entire year off, but there was a tiny little window where things returned to normal, July, August, September, and we jumped in, we drilled 4 holes and confirmed the grades and the intercepts were exceptionally wide and good grades. And then by later that year of 2020, we did a 43-101. It doesn't have a mineral resource estimate, but it was just a technical report, and we could use as our qualifying transaction. So taking a closer look at the Rio results, and again, you know, they worked on this for 3 years. This was not a one and done. They put 18 holes, 4,200 meters, and you get a snapshot of, you know, some of those intercepts. And these intercepts look very, very similar to the intercepts we're seeing in our 2022 drilling. And so this is, you know, very encouraging to see what they did. And on the map on the right-hand side, you start to get a sense of, you know, where they've got thicker intercepts and where they're getting some thinner intercepts. But it seems to be this middle core down over here that seems to be the most encouraging here. So as mentioned, we jumped into the project feet first in 2020. While we were still private and we were still working under the kind of the Avidian banner at that point in time. You can see, you know, images of the drilling, the drill core being logged. This is all from our core shack. We're cutting the core and shipping it out for sample for assaying, and that was this July, August. So, you know, we have received some of the results. We continue to receive more of the results. So this map, it's a fairly busy map, but what you get is an idea of, you know, this was something that we developed about a year ago, looking at areas based on the information that Rio Tinto had provided and what we had you know, demonstrated or repeated again in 2020. We looked at the areas that we knew and we said, okay, where do we think we're going to get the biggest bang for the buck? And how do we get roughly about 500 million tons? Well, you're going to drill essentially, you know, this area here, and you can expand out into this. And this is exactly where we spent our time and effort drilling. Now, this is to get an inferred. If we were to expand and go further out, this is how we can continue to expand that inferred, or we can draw in and get closer and we can go to indicated and maybe even into some measured. So you can see that over that, the history of the project, Rio's 4,200 and then our 1,000 meters in 2020. And this year we drilled an additional 2,300 meters. So all totaled right now, 7,500 meters of core drilled. It's all in our core shack or our storage facility. So we're targeting a maiden inferred resource of about 500 million tons. It could be plus or minus 100. I'm not exactly sure. We're looking at about a Q4. In doing that, we are working with Mercator Geological from Dartmouth, Nova Scotia. They are the people who helped out on the geology side, putting the block model together, putting together the resource. So we're in good hands with Mercator. We've been recently joined by BBA Engineering, and they will be helping the company in terms of the metallurgical work and how it all feeds together into our maiden resource. We completed ore characterization studies with Carem in their facilities in Quebec City. They are a big name in the iron ore space. And then if it all hangs together, we look to start to do a PEA, you know, within 12 months of our listing. And maybe that's something I forgot to mention on one of the earlier slides, is that we were only listed in February 25th of 2022. So we're only about 6 or 7 months down the road on this journey of being a publicly traded company. So, you know, as I said, if it all hangs together, we'll jump in on the PEA level study. If it doesn't, then I guess we're just going to drill some more. So, but it's a little bit too early to be stating anything like that. But we've got some great results, and I think over the last month we've been able to put out some very, very encouraging results. So that last slide here, this A to A prime that you're seeing right here. So if I was standing off to the southeast and I'm looking towards the northwest, that's the section view that you would actually see. So you can see these yellow holes, or this area here, those are drill holes from our 2020 program. And then all the 22 drill holes are listed in blue right over here. And there's more information to come in 65. Well, we haven't got any of the assays. The bottom of 64, unfortunately, we're getting things in an awkward distribution from the lab. We just haven't got those results yet at this point in time, but we will get some. You can see some very thick intercepts, over 200 meters of 32%, and right off the collar, which is really important. As soon as you can see, near surface high grade ore, this is actually something that you're really, really looking for when you're a miner, because this, obviously changes the economics on the strip ratios, etc. So very encouraging to see that. I just want to mention that, we're highlighting our oxide facies iron. And this is maybe a little bit technical, but I'm going to just go over it quickly because it's worth talking about, is that you've got silicate facies, carbonate facies, and oxide facies. Not all of them will become, if you did just total iron, all of it counts towards iron, but you got to say which ones are the ones that are going to actually be mined and processed and turned into those high quality concentrates. Well, it's your oxide facies. Not to say that the other ones can't be. If it's magnetite, we can separate with magnetic separation, but there are other processes involved in that. But anyways, I just wanted to point out that if you see, the scattering through here, that's one of the explanations. The other one is that we are now looking at some of the geological interpretations. So I mentioned Mercator is involved in this to begin with. They are doing the modeling and the interpretation of the macro geological event. So that's what we're looking at, areas in which we've got some of these blanks in here. We might be actually seeing a big fold and a big turn. So that's important to understand the geology and the structure and the lithology, and then where can we drill next to anticipate and intersect more of this desirable oxide facies. So anyway, sorry for going off on that tangent there, but if I'm going to try to put everything together on one slide that shows you where we are in the process. So the tasks are on the left-hand side. Time is our x-axis along the bottom, and on the right-hand side, you're seeing the value. So the start drilling was always all done. We started with some resource drilling this year. What we've been doing to add to the knowledge base we did over the summer, and then now we're at that maiden resource here. And yeah, the PEA study, if that all, like as I said, that's the next step for us. But what we're doing is we're adding value as we go on this. So that's for the Lab West Iron Project. Now, the clear-cut lithium, that was it's an interesting one because it's located in this emerging kind of the Cadillac area. This is in Quebec. So here we are in Quebec. We're in southwestern Quebec to Val d'Or, Malartic, much better known for its gold mining. It's definitely the Abitibi Greenstone Belt. But just to the south and almost following the highway along here, there's this geological subdomain called the Pontiac, and lots of intrusives, granites. And what happened is that all the geologists kind of went out there, looked at it and said, oh, it's just a bunch of granite, walked away, and then just kept on focusing in on this, where the gold deposits were. So not a lot of work was done in this area. And, until, the lithium became something, and people started to, hey, hang on a second, let's go look at that again. So this is a very busy activity. These are all, it's a very busy area with lots of geological activity. You're seeing all these different companies that have been staking and doing active work in the area. Vision Lithium, they had some success with a drill bit, over 2% lithium oxide, 5.5 meters. Sayona Mining, they've got a project just to the west of our project. By the way, this is our project area down here. Sayona Mining, they've had some success. They're looking at a deposit of 5 to 25 million tons from this area just north of Lac Simard. And Sayona Mining is looking to become a lithium producer in the Val d'Or camp using the hub and spoke approach. and they're looking to restart the North American lithium plant in early 2023. So this is really an opportunity. This is something that is, the hub and spoke is great because you got a central processing. They're looking for input and feed from various sources. So I looked at the opportunity here as really low risk and an opportunity to position the company. As I said, infrastructure metals and this lithium, as we know, is going to be key for the low carbon future. So we also had flow through money that had to be spent by the end of 2022. So we're putting those dollars to work on this project. So I think this is an excellent opportunity for the company to diversify to some degree. It's a large project, 14,400 hectares. I was there about 2 weeks ago and had the opportunity. I literally rented a small SUV here where I live. I drove 8 hours or so up to the project area, and I was able to successfully drive around the project. And it's got great access. And as you can see, there's pegmatites mapped from a Government of Quebec map report from 1975. And we look forward to commencing real exploration sometime in October with a heli airborne survey. So the other project, more kind of heading back towards Labrador area, is our Lac Pegma copper nickel cobalt deposit. It's a historic deposit, 2 million tons of roughly 0.62 copper, 0.34 nickel, and 0.3 cobalt in magmatic sulfides. And just about a kilometer to the north is a small zinc deposit with only 13 holes, and we found graphite on the project. And again, that line cutting through it, that's a Hydro-Quebec power line, so exceptionally well located. In terms of close to power, you couldn't get any closer than that. I do have experience with the project. I worked on it back in 1996 and discovered and drilled some of the discovery holes. And this is back in 2001. You can see revisiting. That's the drill core I logged back in 1996. So an exceptional kind of coming back, and really we picked this project up for a small issuance of shares and $10,000 in cash, and it was good to go. So what we've done is we've increased the footprint of the project area. We've done a historic data compilation and modeling. We did a geophysical survey. We relogged and resampled the select drill holes, and we can confirm, the assays confirm the historical results, and we've done field mapping, et cetera, et cetera. Unfortunately, we're still awaiting an exploration permit. So that's why we haven't undertaken a lot of work on that project at this point in time this year. And that's where some of those extra dollars were earmarked for, and that's why they've gone towards the lithium project at this point in time. But still, this is a high quality project. It's very much in demand metals, copper, nickel, cobalt. This is really the suite that you want to really look at. And there's a lot of area here to drill these conductors with subsequent mag. This is where the deposit is sitting. We want to get out here and drill this. We were able to take some samples. We found some new areas to the south that look like they've got some legs as well. So this is very much a project of high interest. We just need that permit there. So let's just take a quick look at the catalyst for 2022. And again, diversified projects all located in safe, secure, and accessible Canada. That photograph is from the Clear-Cut Lithium project. That's one of the little trails that we were driving down. I'm glad it was a rental and not my own car. At Labrador West, iron ore, so what's going on? More drill results. So September, October, we've got a couple of more holes to come in. So we'll get that news out to you as soon as we can. Again, with the help of BBA and Mercator, we're going to have that maiden resource estimate, maybe November. I hate putting dates out there because now everyone's going to hold me to them. But anyways, I get to hold them to the consultants to that as well. The PEA. Again, if the mineral resource estimate is sufficient, we go ahead. we'll use this MRE. We'll look at it and we say, okay, is this a big enough deposit that we've got right now? Do we need more information? What do we have? If it's got it, we go ahead. If we got to go and drill a little bit more, that's what we do, and we just wait till that time is right. At Clearcut, the lithium project near Val-d'Or, where we'll be flying a high-resolution heliborne magnetic spectrometric survey. So with that, we'll be interpreting targets along with our LiDAR. So we've got an expert, a lady from Australia who is world leader in this type of use of the LiDAR along with the geophysical to pick these targets. Once we have those targets, we're going to get boots on the ground prospecting November, hopefully before the snow flies, to make it easier for everybody. Get out there, get some work done. And then again on that Lac Pegma on the copper, nickel, cobalt, and zinc in Quebec, we're just waiting for the permits on that one. So that's where we stand on the catalyst for this year. Again, I'm available at Roebuck at hightideresources.com. You can pick up the phone if that's easier and call me at 905-741-5458. You can visit our website, and thank you very much for your time. I hope that you see what we've got. We've got a commodities, essential commodities type of company. We've got a lot on the go. We've got good projects, good jurisdiction, near infrastructure. These are all key things that you are should be give you warmth that we're in the right direction here. And with that, thank you very much, David.
All right, thank you, Steve. We did receive some questions during the registration process, and I think we have some time to address those now. Would you like to begin the Q&A portion of the event? Sure. First question: how do you value the Labrador West Iron Project? Are there other examples?
So, yeah, we're it's not like there's 10 other little juniors running around in the area. We're a bit of a unicorn. So direct comparables have always been a challenge. So you're going to have to look broader and maybe look back in time. And so that's what I did do. I found various examples, and the valuation is important when somebody is selling a project. And so you look at them and say, okay, at what stage was that project sold? And then you say, okay, well, how many tons? So I've looked at them and I see 9 cents, 10 cents, 12 cents, and one actual project that was sold in 2014 in Africa. It was actually 24 cents a ton. So I would look at it and say, if the range is, let's say 10 to 24, let's get ultra conservative and let's say 10 cents. So if it's 10 cents a ton in situ value for a resource, 28-32% in that range where we're kind of hitting at 500 million tons, and that's why I lean on that area, that number, 500 million tons at 10 cents. Well, the valuation is roughly about $50 million. So I don't know what our market cap is today, but I'll bet you it's no more than $8 million. So I think that, there's a lot of runway on that one there. And this is, iron ore is kind of unique, but how do you compare it maybe to a gold deposit? And so if I was to compare it to a gold deposit, if I said we had a 1 million ounce gold deposit at, say, 1.5 grams per ton, decent grade, decent sized deposit, I think that the in situ value of every ounce would be roughly about $50 per ounce in the indicated resource category. So that's $50 million, right? So that would be, to me, the comparison. So how do you increase the value? Is that you drill more, you expand the size, you de-risk it, you increase, from resources to reserves, and then I think you can throw a zero on the end, and you've increased the value from $50 million up to $500 million. So And that's through, going from the PEA to the PFS to the FS study, feasibility study level. So along the way, a lot of drilling, a lot more engineering, a lot of knowledge going into it and de-risking it. And that's why I go back and compare back to the Kami deposit all the way through. And I think that's where, when I grow up, that's what I want to be, is that project right there. So there is a roadmap on a corporate basis, and there's a roadmap on a technical basis on how to do that. And I think that's, incredibly valuable information.
Great. No, makes sense. What differentiates Labrador City from Schefferville?
The differentiation there, interesting, is Schefferville really was where everything got going. That's where iron ore started in the Labrador Trough. Everything started in the 1950s, and it was a booming town. But by the mid 60s, the focus had kind of shifted from Schefferville and gone to the southern Labrador Trough in and around Labrador City. So maybe over the course of 10, 15, 20 years, the production shifted from Schefferville down to Labrador City. I think so. It was a result of the product. They could make a better product, a better concentrate, a more saleable product from the iron that came from this area. It wasn't by fluke that they managed to go down there. Through their work and analysis, they realized that there was more to be, a better product to be derived from the iron in and around Labrador City, which is very similar to what we've got. We're in that same camp, same type of iron. They're still operating up in Schefferville. I believe Tata has an operation, and I know that John Kearney and his people at Labrador Iron Mines are trying to restart their project, just the Houston deposit, I believe, just to the southeast of Schefferville. So there's still activity in the area, but certainly, the product quality is better, although sometimes the grade is higher. That was actually even in Schefferville, there was a bit of it. It's a DSO to some degree, similar 58 to maybe up to 62%, but it does have some penalty elements that they don't seem to see in the iron or in the iron products that come out of Labrador City.
Gotcha. Thank you. We have time for one more question.
Okay.
And that is, could you, and I think you've touched on it during the presentation, but I think it's important to reiterate. So I'm going to ask this. Anyway. But why acquire a lithium project if you are an iron ore company?
Well, I think we're explorationists and not exclusively an iron ore company. And we're also business people, and we saw a good opportunity to bring share price appreciation to the company and through this and diversification. Our focus is on the infrastructure commodities, as you know, and that includes iron. That's the biggest one in infrastructure is iron, and then copper, nickel, cobalt, and of course lithium. So I think these are, just everything fits really quite nicely. And again, it's just, share price appreciation. We want to make sure that the shareholders are rewarded in here. And then, and lithium is in huge demand, and in the Val-d'Or camp, things are happening. Everyone, like I said, everyone thinks about Val-d'Or as just for Val-d'Or, Valley of Gold, but there's that lithium area to the south and to the north. They're seeing lots of investment in that. And I made mention that we needed to spend that flow through dollars, and it's a great project to do it, and a great jurisdiction to be working in.
Yeah, agreed. And before we wrap up, you and I were speaking before we began this event, but you mentioned that you're about to travel to Labrador City this weekend. You want to elaborate what you're going to be doing up there?
Sure. Labrador City, there's a little trade show called Minex 22. It's an iron ore lovin'. the good people of Wabush, Labrador City, and Fairmont come together. And more than that, there's the industry there. There'll be IOC, there'll be Takora, there'll be the federal local member of parliament will be there, the provincial minister of mines, the CEO of the Power Corporation, local tradespeople and suppliers, and super important is the First Nations. So this is an opportunity for me to meet a lot of these people for the first time, and to be able to present the company and really, see what's going on in Labrador City, and seeing how high tide can fit in and be part of the continuing, dynamic iron production scene of Labrador City. When I go to Labrador City, it's exciting. I mean, there's an energy. There's a lot going on, and it's flat out. It's great. It's almost if you went to Fort McMurray, at $150 a barrel oil, it's just going crazy. Same deal is going on here. There's a ton of energy, and I think that high tide has got the next project in the queue, and meeting with my peers in this area is a great opportunity. Meeting with the government and the First Nations, and seeing how we can participate in this, and see how we can, position the company for success in this camp. And so, yeah, I'm really excited to get that. And then to top it all off, we get to do a mine tour at Carroll Lake and at Takora's Scully mine. So get to see operations firsthand. So I'll be able to come back to you guys with some great images and stories from the frontier.
Terrific. Well, safe travels, Steve. And thank you again. Today's webinar recording will soon be made available on High Tide's website. If there are any additional questions that have not been addressed on this webinar, please feel free to email us at hightideresources@rbmilestone.com. Again, that's hightideresources@rbmilestone.com. Thanks again.
Thank you.